Hello everyone, Dividend Enjoyer here today with a Nike stock analysis, ticker symbol NIKE. Now you might be wondering, is Nike something I should sell out of, or is this a time for me to be greedy when others are fearful? What is the stock's fair value according to a DCF? Today I'm going to be answering all those questions for you. We're going to be going over some articles. We're going to be looking at the dividend compound annual growth rate, their history of dividends, their free cash flow, and really just the entire business as a whole, kind of what things could hurt the business, what things could help the business, and really just give you a better idea of what you're investing in if you're investing in Nike stock. Nike stock currently trades for $77.08 as of recording this video. The stock is down 27.66% year to date, with a 52-week low of $70.75, which shows that the stock is pretty close to its 52-week low, and a 52-week high of $109.96, pretty far off from the 52-week high. The market cap of the stock as of today currently sits at $114.73 billion. The PE ratio for the stock is 23.81, and the current dividend yield annually is 2.08%. You can see from here that Nike has been able to consistently beat on EPS. However, the Q3 2025 estimates are cut in half from a month ago. Now, Nike is only expected to make 31 cents a share when they were expected to make 66 and 82 1 to 3 months ago, respectively. And for the Q4 2025 estimate, you can see that currently for Q4 of 2025, they're expected to make 30 cents. 1 month ago, that amount was over double at 70. And 3 months ago, it was almost triple the amount at 87 cents. This means that while this isn't good, obviously, if you're an existing shareholder, if you're looking to buy in, this might actually be good, potentially, because the expectations are so low that I think Nike has a better chance of really exceeding these low expectations once they're able to get their act kind of back together. Here I also have from the Wall Street Journal some analyst ratings on Nike. As you can see, the analysts are very split. You can also see that in the stock price targets with a high of 120, a median of $87.03, and a low of $50. This just shows that the analysts that do this for a living and track Nike for a living are all kind of split on their opinion on where Nike should be priced and if Nike can win or not. I think this comes down to your personal opinion on Nike. I think the brand is the strongest brand in the world personally, but I do think they do have challenges with a very competitive kind of market space and market share being taken. I also think they do have a lot of expenses when it comes to either their supply chain or just the actual materials. They're obviously a company that's sensitive to changes in prices of commodities and things like that. They're also subject to foreign currencies as they operate in other countries. There's a lot of things that could make Nike not as appealing. I also think if you're looking at really putting down a lot of money into Nike stock, you should probably wait until the current Trump administration kind of shows their hand and shows how they're going to handle foreign trade, because since Nike does a lot of, business in foreign countries and imports things and does things like that and uses labor that isn't here, I think you're going to want to kind of take a step back and wait to see what the current administration does, because I think that that's maybe priced in, maybe not, but it's definitely something to consider and something you want to be certain about before you put your money in for a long period of time. So I would say just wait another couple of weeks until, end of January, February, see kind of how the scene's playing out. If Nike becomes too expensive for you, that's okay. But I mean, if you want to really strike and you're certain that Nike is going to be the winner and be able to grow their market share, I would say strike now. But if you're going to be more cautious and you're not really sure, which I think is the majority of the people watching this video, then I think you should sit back, watch what the Trump administration is going to do, because that's going to be a long-term effect on the earnings of Nike, and then make a decision based off of that. This is an excerpt from a recent article about Nike where UBS reiterated its neutral rating with a $73 price target. And essentially, they're saying that Nike is in the initial stages of an 18 to 24 month cycle for new product innovation, and that that period is critical for the development and introduction of new offerings, which can influence the company's performance. So essentially, these next 18 to 24 months, it's critical that Nike unveils something that is profitable and that will grow. So these next, half a year is really important for Nike. I think we're in kind of a time where there probably is too much fear about Nike. I think it's a very strong company, but they do operate in a market that isn't very attractive to me. I'm not a fan of, markets where there's a lot of competition, a lot of people can enter in, and it's not like Nike offers a type of shoe that does something completely different. You're just essentially paying for the brand, and historically companies like that tend to be outperformed by companies that are producing a product that's vastly superior. When I see Nike shoes, I don't think the product is vastly superior to an Adidas or something like that. So I'm a little bit hesitant about this. I think there's definitely some value there because the brand is very powerful, but I don't think they're creating something that's, revolutionary. Here we can see that Nike has a good record of dividend growth. They have actually raised the dividend for 23 consecutive years, and now, with a little over a 2% yield, I think that the dividend looks really attractive for potential dividend investors who want a growing dividend to either live off of or eventually just grow into something that can give them financial freedom. He's also been able to grow the dividend at a high rate. The 1-year dividend growth rate is 8.63%, 43.95% higher than the sector. The 3-year compound annual growth rate of the dividend is 10.15%. The sector median is 10.34%. This is a negative 1.86% increase. However, on the 5-year compound annual growth rate, they boast a very impressive 10.78%, and the difference to the sector there is over 50%. And then the 10-year compound annual growth rate is a staggering 11.69% yearly average increase of the dividend. This is 58.85% higher than the sector. And this is obviously great because you want the dividend to be increasing by 11.69% because that's pretty much going to beat inflation almost every single year, and you're going to be able to either invest more into the company or have a greater passive income for your retirement. We're starting the discount cash flow model of Nike, and I'm going to start by showing you guys my methodology for calculating the weighted average cost of capital this time. So I took the total debt, total weight of equity, and I basically got this formula where I multiplied the cost of each, also included the tax rate in there for the cost of debt, for the weighted average cost of capital, and then you add them together. After you multiply the weight of each one by the cost of each one, and then add them together, that's how you get your weighted average cost of capital. And for Nike, I got 7.45%. So that is what I'm going to be using for this model. Now, I wanted to show something really interesting to you guys because I haven't really seen anything like this. I used our discount rate that we have, and I put the growth rate as 0%, and I got a discounted cash flow per share fair value of $72. So if Nike does not grow, it will still be worth $72. Let's put a -3 in there. Still worth $60 if it grows -3% each year. Now, if it grows 2%, which is not a lot, it's a buy. If on average they're able to grow the cash flow, let's say 6%, it's worth 111 a share. I think a more realistic approach to look at Nike is maybe like a 1.5 on average. I think it's probably close to its fair value. But I think if you're able to wait out next year where you're going to probably have negative growth and stay with the stock, I think that this is a buy. I think the range for this stock and fair value is probably, gosh, it's probably between $75 to $95, I would say, is probably the fair value. And that's a pretty big range, but if they're able to get out of this slog and kind of we look back on it like it was nothing and everyone was freaking out over nothing, then then I mean, this is not a far off value where it would be worth 120. If they can on average gain 7% a year, I think that would be pretty big for Nike, but time will only tell. Personally, I have not bought any. I thought about buying it last night. I was really thinking about it, but then I was thinking I would rather probably have Salesforce over Nike still, or maybe a Microsoft even though in my last video I did prove that by this valuation metric it is probably overvalued. I just don't like the strength of the company right now, and there are too many uncertainties for me personally to buy. But as you can see with different growth rates, the company is a buy. Even at 0%, it's almost a buy. $72.32 if they don't grow over the next 9 years their free cash flow at all. I think they're going to be able to grow it. I think that this is a temporary setback and that Nike will be able to come back. But again, it's hard to tell. I think there are better opportunities with higher quality somewhere else. I think Nike has a really strong brand, but I don't think they're actually doing anything personally that differentiates themselves as a shoemaker. I think that pretty much all shoes serve the same function, and I don't think that Nike is. I think it's special, but I don't think it's special enough to justify throwing money in. I don't think they're doing something radically different at Nike that they're doing at Adidas or Puma or any of the other shoe brands. I do think they're the biggest, so I also think that means you have a lot of room to fall. And I think that they need to really innovate in a new way and make something different. Otherwise, they're going to be losing a lot of money. But even if they can grow on average 4%, which isn't really even that great, the stock's worth $96. So if you believe that Nike can get out of this, you should probably be a buyer of Nike. But if you don't think Nike can get out of it, I wouldn't touch the stock. Thank you guys so much for watching my Nike stock analysis videos. If you want to watch more stock analysis videos, I have a playlist right here and a recommended video for whatever the algorithm thinks is best for you. Thanks for watching. I really appreciate it, and have a great day.